David, I was saying earlier to our Brian Stasi, here we are, the S&P 500 is near a record, right? We've seen stocks sort of rise here. It doesn't feel like it though, does it? I don't know. What do you, like the sentiment here, just like we were talking a lot about the vibe session or whatever, that people didn't feel good even if the economic numbers looked good. Right now it feels like we're in a little bit of a similar situation with the market. What do you think?
Yeah, I think there's a lot of moving pieces to that dynamic. Certainly the market has kind of climbed a wall of worry over the past few years. It's actually, one of the most persistent rallies on like a 3-year basis or 4-year basis we've had in quite a while. However, I think there's another dynamic to this, which is, what's going on with the dollar and dollar debasement. And, if you look at the stock market, say the past 20 years or so, it's not actually up versus if you price it in gold or something of that nature. So there's certainly an argument that if the dollar loses value, just to keep pace, the stock market has to go up proportionally. I think that's part of what we're seeing there.
Interesting. Okay. So do you feel like the reasons that the stock market has gone up or not? I mean, there are fundamentals to support increases still, however, right?
Yeah, absolutely. I mean, if you look at overall earnings growth, they've been pretty good. I mean, certainly there's been concern around software names, but it looks like energy is having a bit of a comeback. So there certainly are some fundamental reasons for that. And gold is certainly up considerably regardless. It's not just an inflation story.
Right. So the software sell-off, would that be something have you come in and bought some of those names?
So we haven't. So there are some real concerns about some of those software names. I think at the end of the day, AI is going to be a net positive for certain software names, and others it's a huge net negative where they can actually be outright replaced. But I think if you look at a company like, maybe one exception is we bought into some ServiceNow, and ServiceNow is one of those companies where I think they'll probably be a net beneficiary of AI, whereas you look at a company like, let's say, a Monday.com, and it's pretty easy to replicate some of their services through some of these vibe coding type apps.
Okay, so what's the difference between a Monday.com and a ServiceNow in terms of why does ServiceNow have a bigger moat than say a Monday.com?
So first, it's pretty difficult to replicate because there's a lot of infrastructure that needs to be in place for companies that have large customer service operations. So I think that's certainly a benefit that ServiceNow has, whereas Monday.com is a relatively simple piece of software that can be replicated at least for, say, 80-90% of the use cases without that much difficulty.
Gotcha. Okay, so selective buying in software. What about, you mentioned energy, which is the best performing group this year thus far after lagging, for a while. So are you participating in this whole rotation that we have seen into some of those kinds of areas, industrials, consumer staples, et cetera?
So we haven't rotated our portfolio a whole lot. We've held a little bit of energy names. We own some Marathon. We own some Talon. But if you look at our portfolio more overall, I'd consider it to be more like durable compounders.
What does that mean?
What that mean is more companies like a Visa or a MasterCard or a Meta, those types of firms that have strong moats that consistently grow their earnings with high margins, high return on equity, high return on capital.
And I want to also talk about some of the other asset classes, right? Because you mentioned gold. And I think that regular investors who sort of got in and then were whipsawed are struggling to figure out what to do now when it comes to gold and silver, because there's the fundamental case, just like there's for stocks, and then there's sort of the technical effects of what happens when people get positioned in a certain way and then have to make up for that. So how do you square those various things?
Sure. So I guess there's lots of things moving at the same time. So I'd say you'd have the deep currents, which are things like central bank buying or deficit spending on the US federal government level. And those are very strong deep currents. And they likely will take gold higher in a big way the next 3, 5, 10 years. But then you also have some of these things like the recent Fed appointment which make it unclear. Are we headed for a stronger dollar or a weaker dollar? They're kind of saying two different things. It's not clear. It's clear what Trump kind of conceptually wants, but it's not clear how much Fed independence there really will or won't be. And increases in margin requirements, some of these violent moves like we had in gold or even more so in silver, I think will create a very volatile rally over the next 3 to 5 years. But it's going to be one where you have to wear your seatbelt.
And what about crypto? Does that fall into a similar category?
So I think crypto has kind of lost that digital gold story, and it's become much more clear that it's more just a high beta asset. And I think, frankly, there have been a lot of things distracting people from crypto. Crypto at one point was the real meme stock equivalent, whereas now you have crypto, but you also have meme stocks, you have gold, you have silver, you have a real betification across the economy. And I think that has taken a lot of the capital flows away from crypto.
That's a really interesting thesis. I mean, and we see it also in the single stock movements, not even just meme stocks, but other types of stocks that normally you wouldn't think would move that much are moving a lot. Do you think there's also, because of the crypto washout, that has pushed a lot of money into some of those memes instead?
Yeah, or I mean, I think the memes have attracted a lot of money that might have otherwise gone to crypto.
Gotcha. So does that mean you don't want to be positioned in crypto?
I think crypto is a very binary story, and it's very unclear what that future will look like. It'll either be much, much higher 10, 20 years from now, or it could be that Bitcoin was a fad or it could get hacked, or people might just not have that appeal to it like they did previously. It's just too hard to tell. But I think of it's a great investment as a call option, but that doesn't mean it'll necessarily work over the next few years.
When people used to ask me about it, I used to say, don't put anything in it you can't afford to lose.
I think that's definitely a good way to look at it.
I don't know if it's still that way, but maybe. All right. Thanks so much, David. Appreciate it.